Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the detail are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome to the Deep Dive. You've given us, well, quite a stack of sources today. It feels like a perfect storm, really market action, geopolitics, big institutional moves, and this AI race.
It really is a convergence point. Finance, sovereignty, technology, it's all hitting at once. So our job for you today is, to cut through the noise.
Go beyond the headlines.
Exactly. Pull out the key connections, see what's really driving things, and give you a clearer picture of where finance and tech might be heading right now.
Okay, let's dive straight in then. The U.S. government shutdown that just happened. Normally you'd expect markets to, panic a bit.
Right.
But crypto, it did something completely different, a real paradox.
Yeah, it's fascinating. Bitcoin almost acted like a counter-signal to the government grinding to a halt. The moment the shutdown officially began, midnight in D.C.,
The price jumped.
immediately, a clear pump. Went from about $114,000 up to $118,000 pretty quickly. It's almost like the market saying, okay, your system's down. Fine, we've got ours.
That's quite a statement. But it's not just the spot price, is it? We need to look at the actual investment flow, the commitment.
Definitely. And leading up to the shutdown, even with the uncertainty, the inflows were huge. Like $1 billion flowing into Bitcoin and Ethereum ETFs combined.
Okay, so big money was already betting before it happened.
And that confidence held. Even after the shutdown started, the inflows were still strongly positive. First reports were, hundreds of millions. But then Grok, that AI data aggregator, updated it, came in at $859 million. Positive inflows.
Wow. $859 million after the shutdown started.
Yeah. That's serious institutional conviction. It suggests they see crypto as maybe immune to this kind of government instability or perhaps even benefiting from it.
That's a huge difference from the last big shutdown, right? Back in, what, late 2018, early 2019?
Oh, completely different world. That was 35 days long, deep in the crypto winter. Bitcoin was hovering around like $4,000 then.
Right.
Now, it doesn't just shrug off a shutdown. It seems to treat it almost like a bullish catalyst.
And timing-wise, we're heading into October.
Well, yeah, there's that seasonal trend too. Q4 historically tends to be pretty strong for crypto, October, November, December.
Okay.
But there's also a specific cycle marker. This October, it's the 18th month since the last Bitcoin halving.
And that's significant because...
Historically, that 18-month point has often preceded the run-up to new all-time highs. So you've got this mix: geopolitical stress, institutional buy-in, and potentially favorable market cycles all kind of lining up.
Interesting confluence. But okay, let's circle back to the shutdown itself. Even if the price is pumping, the shutdown must cause some problems, right? Indirect effects, regulatory friction.
Oh, absolutely. The immediate impact is on the regulatory side. Think about the SEC. They need data from various government departments to approve things like new ETFs.
And if those departments are shut down?
Exactly. Those are deemed non-essential, so the data flow stops, which means any new ETF applications, maybe for Solana or Dogecoin, whatever's in the pipeline, they're likely going to face delays.
So it gums up the works for new institutional products.
It does. And that data blackout hits the Federal Reserve, too. They rely on things like CPI numbers, inflation reports.
Which are also delayed.
Right. So how does Fed Chair Powell make informed decisions? He hinted at potential rate cuts later this year, back at Jackson Hole in August.
Yeah, November, December, maybe?
But if he doesn't have the latest inflation data, it makes things much trickier. Adds another layer of uncertainty for, bonds, equities, the whole macro picture.
Speaking of Powell, there was that really interesting bit in the sources about his view on tariffs and inflation.
Yeah, this is pretty important. He has this, let's say, unique perspective. He suggests that higher tariffs, like the ones on Chinese goods, aren't actually pushing up U.S. consumer prices that much.
Really? Because the standard thinking is tariffs mean higher prices for consumers.
Right. But Powell's theory, or at least what's suggested, is that the cost increase is mostly being absorbed further up the chain by the middle person, wholesalers, suppliers, importers.
So they're eating the cost to stay competitive.
Kind of, to protect their margins or maybe just keep volumes steady rather than passing the full hit onto retail prices.
Okay, if he genuinely believes that, it changes things. It means he might feel less pressure to hike rates just because of tariffs.
Precisely. It potentially removes one inflationary pressure point from his dashboard, which could be seen as, well, less negative for risk assets like crypto. It shifts the narrative a bit.
Okay, so that's the domestic side. Zooming out again, geopolitically, there's this major push for peace in the Middle East. Israel, Palestine, U.S. involvement.
Yeah, the eternal peace goal. From a pure market view, any significant de-escalation there tends to be positive.
How positive?
Historically, you sometimes see crypto jump 10%, maybe 20% on major positive news from the region. Plus, peace could mean lower oil prices, which helps the global economy generally.
But beyond just market reaction, the sources mentioned potential crypto adoption in that context.
That's the really interesting angle. Ideas like a border of peace, a trilateral committee. There's speculation they could actually explore using crypto for trade agreements.
Seriously, like official state-level trade using crypto.
It's not totally out there. Think about how forward-thinking some places in the Middle East already are with digital assets, like the UAE. If you have a new political reality, maybe using neutral digital rails for trade becomes almost a necessity.
Fascinating. Okay, let's shift gears to where the big money is flowing structurally. Tokenization. There's this huge partnership forming. Ripple, Securitize, BlackRock, VanEck.
Yeah, this isn't just a small experiment. This looks like serious infrastructure building for tokenizing real-world assets.
As the goal is.
Enterprise-grade utility, basically. Boosting liquidity for these tokenized assets, creating a reliable 24/7 way for institutions to get cash in and out and off-ramp, and bridging the gap to DeFi.
And Ripple's stablecoin, RLUSD, plays a key role.
Looks like it. Positioned as sort of the plumbing for this new system. And Securitize is interesting here, too.
Because they've been around for a while.
Exactly. They were working on this stuff back in like 2016, 2017, way before it was trendy. So now they have this first mover advantage, especially on the regulatory compliance side, which is obviously crucial for giants like BlackRock.
Makes sense. Though on the Ripple front, there was also news about their CTO.
Right. Yeah. A personnel note, but a significant one. David Schwartz Ripple's longtime CTO, is stepping down end of year, focusing on family.
That's big. He's been a major figure.
Huge. So while the partnership looks strong, that kind of leadership change is definitely something the industry will be watching closely.
Absolutely. Okay, moving on to broader market dynamics, this idea of an Ethereum treasury trend, non-crypto companies buying ETH for their balance sheets.
Yes, and not just buying it, but often planning to stake it, participate in securing the network.
And we're seeing that reflected in the numbers.
Big time. The total value locked TVL in proof-of-stake protocols has just exploded. It's up to, what, $167 billion now?
Wow. And before?
Before this whole ETF news cycle and institutional rush, the average was more like $30 billion to $40 billion. That jump isn't retail FOMO. That's largely institutional capital seeking yield and utility via staking.
And part of what's driving institutions towards DeFi is just cost.
Simple math, really.
Yeah.
If you're a big institution trading large volumes on a traditional centralized exchange, a CEX, you might be looking at fees of, say, 4 or 5%.
Ouch.
Yeah. But on a decentralized exchange, a DX, fees are typically way lower, often less than 1%.
So for big trades, that difference is massive.
It's huge. It's not just a small saving. It's a major economic driver pushing sophisticated players towards DeFi for better execution and liquidity access.
Okay, but while all this growth and adoption is happening, there's also internal drama within Bitcoin itself. Core versus knots. Sounds a bit like 2017 all over again.
It does have echoes of that, yeah. It's fundamentally about miner selection and potential censorship. Bitcoin Core implemented something called Trade Version 2.
Which lets miners
basically pick and choose which transactions they include in a block. And naturally, they'll likely prioritize the ones that pay the highest fees.
Okay. Sounds efficient, maybe, but the knot side argues.
They argue it opens the door to censorship and centralization. If, say, a government pressures a few big mining pools, those pools could theoretically just refuse to process certain transactions, exclude them.
Which was the big fear back in the scaling debates.
Exactly. And here's the twist. Knots has proposed a way to counter this miner selectivity, something called the ocean pool.
Okay, a technical solution.
Yes, but, and this is the controversial part, the ocean pool isn't open source.
Oh.
Yeah.
That seems counter to the whole crypto ethos.
Right, so it creates this really awkward trade-off. Do you stick with the fully open source core, accepting maybe a small risk of fee-based transaction selection that could lead to censorship? Or do you use this closed source solution from Knots to fight that risk, even though the solution itself isn't transparent? It's a deep philosophical conflict.
That tension between open decentralization and closed solutions is a perfect lead-in to the next topic, digital identity. The UK is launching its official digital ID, separate from the national insurance number.
Yeah, and this immediately sets off alarm bells for privacy advocates, a centralized digital ID system.
Well, the dangers are pretty well known.
Like what?
Massive data breach risks, for one. You create a single target holding everyone's data. Think about past breaches El Salvador's Chivo wallet, 23andMe.
Right, a honeypot.
Exactly. Plus, the potential for government surveillance, tracking, maybe even political manipulation based on that data. It centralizes a huge amount of power.
And the source mentioned the feeling on the ground in the UK is not great.
Apparently, the sentiment around it being compulsory is described as horrible. People are not happy about it.
Okay, so while that's happening, we're also seeing shifts in just how people find information online. Google searches for Bitcoin are down to an 11-month low.
Yeah, but the hypothesis isn't necessarily that interest in Bitcoin is waning. It might be more about how people are searching.
The idea is that users, especially younger demographics, are shifting away from traditional Google searches for many everyday tasks. They're using conversational AI instead, ChatGPT, Grok, things like that.
For searching, shopping, even finding places.
Exactly. So if people are asking their AI assistant about Bitcoin instead of typing it into Google, the Google search trend metric might not capture the full picture anymore. The gateway to information is changing.
And that leads us straight into the global race for AI dominance at the state level.
Absolutely. Look at Abu Dhabi. Their stated goal is to become the world's first fully AI native government. Every digital service, AI-driven by 2027.
Is that realistic?
Given their resources, partnerships with firms like G42, and existing infrastructure, yeah, it's considered highly achievable. They're serious about it.
And Saudi Arabia is also making moves.
The Crown Prince has this project called Humane, an AI-embedded laptop. They're gifting it to 100 students initially. It signals a major push towards integrating AI at a fundamental level. The Middle East is really positioning itself as a leader here.
So let's try and tie all these threads together. We started with crypto's surprising resilience against, something like the U.S. shutdown.
Right. Then we saw accelerating institutional adoption, driven by things like tokenization partnerships and the cost advantages of DeFi.
But at the same time, internal debates about decentralization are still raging, like the core versus knots issue.
Yeah, that fundamental tension within crypto persists, and running parallel to all of that is this huge push from states UK, UAE, Saudi Arabia towards centralized digital identity and AI-native governance.
Promising efficiency, seamlessness,
Yeah.
but potentially at the cost of privacy and individual control.
That really seems to be the core conflict emerging. You've got the efficiency and, let's face it, the convenience promised by centralized AI-driven systems on one side.
And on the other.
The fundamental principles of digital privacy, open technology, and individual sovereignty that are championed by things like open blockchain networks. These two forces are increasingly on a collision course.
So the final thought for you listening is, as these two powerful paradigms clash, the centralized, AI-driven state versus decentralized, open networks, how are you thinking about securing your own digital footprint, your identity, your assets in this rapidly digitizing world?